Morning, everyone. Let's kick it off. All right. Yesterday we had a bit of a bounce back after a couple days of selling in the States. I think what was really the driver, and I think we really hit the nail on the head over the last few sessions, has been the U.S. Treasury yields. If you look at if you overlay a chart of the S&P over the 10-year Treasury yield, it's completely inverse. I mean, it has the basically 100% inverse correlation over the past however many sessions. So that's obviously kind of still one of the biggest things that the market's paying attention to. Yesterday in the morning, we were trading up at around 225 in 10-year Treasury yields. We spiked through 225, which was the highs in yields back from March. We spiked all the way up to 230. That's when the S&P sold down to down 16 points on the future. That was our weakest point of the day. It was pretty close to our future's weakest point of the day as well. And from there, as yields started to fall off, the market started to recover, and we built into that into the end of the day. That was obviously supported a little bit by Alibaba that had earnings out yesterday. I think that stopped the bleeding in the tech space for the time being. You saw tech have a decent little bounce yesterday, up 0.75%, really led the indexes on the NASDAQ side. And, like I said, those have been the leaders. So the leaders caught a little bit of a breather yesterday. And, we're going to wait and see, if we can get any more, earnings leadership to support that. But, to me, I don't think that it's a long-term thing. I don't even think that those numbers out of Alibaba were that spectacular. I think it just kind of, caught the market very wrong-footed. They had just broken down a couple sessions before, and therefore opened the door to a big reversal. If we look at the Asian section overnight, a bit mixed action. Shanghai down again. The Nikkei up a bit, Australia up a bit, Hang Seng up a bit. No leadership at all whatsoever. I think just a bit of a relief rally in a couple of these indexes. The big thing that obviously happened overnight was the UK elections. Right now we're staring at the FTSE future, which is trading up over 1.5%. A second ago it was up over 1.75%. The huge move in the pound. I'll show you the chart in the rand pound in just a little bit. And so that's the reason why our futures are so bid up this morning. Is basically the move in the rand pound, and obviously the move in the FTSE that's driving our market as we speak this morning. All right, if we look at chart of interest on the day here, we've got just a chart showing how low global interest rates are in the grand scheme of things. Since 1522, we haven't seen this is the of 3 times that we've seen interest rates globally as low as this, all the way since 1522. So, I think that obviously there's only one way that we can really go from here. And, the yields that the swings that we've seen, guys, they are in a different realm relative to what we have seen. If you look at yesterday, the German 10-year yield was at 75 basis points. It's at 53 this morning. A week and a half ago, we were at 14 basis points. I mean, if you look in percentage terms, we're talking about hundreds of a percent in percentage terms. It's the wildest ride that you can possibly get. And the way that we're seeing things move around in the 10-year as well. So, these things are air pocketing around and big percentage moves. And you keep hearing that and through the market that there's no liquidity. There's no liquidity. So when something starts to move, it starts to move so fast and so aggressively that it can clear you out and can change everything in an instant. And there's nothing in between. There's nowhere to get in. There's nowhere to get out. And so I think that's going to be a really interesting thing. I think that's led by interest rates. I think the move in interest rates is going to be everything. I've talked about this for 2 weeks. I think the moves yesterday that we saw in the S&P relative to the 10-year yield, it was proof that is what we need to be paying the most attention to, not just for now, probably now all the way out throughout the rest of the year. Right, we're going to look at some corporate action out this morning. We have ArcelorMittal, which is coming out this morning. We've got Harmony, which came out a second ago. Looks like headline earnings per share, quite a significant loss and a miss on expectations as well as revenue. We saw the same thing out of Goldfields yesterday. They got absolutely beaten down. I think that we could definitely potentially see some more follow through today in that space, maybe not just in Harmony, but in the gold miners in general. South African gold miners are just freaking dead wood. All right, key factors out today, market data. We had Chinese trade balance, which is a little bit lighter than expected. We've got industrial production out of Germany. We've got trade balance out of Germany. We've got change in non-farm payrolls in the States, which is obviously the big one. And to me, today, there's a lot of weight on this. 230 expectations. We see something 250 or north. That could be the nail in the coffin in terms of raising rates. I think recently we've seen the rate hike expectations pulled forward a bit. And then we've got wholesale inventories out in the States as well as unemployment rate. All right, let's get into the maps. First thing that we're going to look at is, we already got the chart up here, so this is the U.S. 10-year Treasury yield. So yesterday we were trading around 225. When we popped up through that, you can see, we ripped up higher. I don't know why it's giving me two charts here, or two bars, but that's essentially repeating the information. The move we saw up to 230 was a nice little breakout. I think a couple of stops got triggered, and we very quickly just started to drift down. And once we dropped below 225, it was kind of a one-way train after that. And that was when we really started to see the S&P start to tick higher. That market is very afraid of higher yields right now. Trust me when I say that. We saw also a significant move back in the rand after we traded back below those levels. That's going to be a detriment to emerging market currencies, probably emerging markets in general. As we see yields go higher, it's not going to be good for the emerging market space. So just keep that in mind as we go forward in the next couple of weeks if we do start to see a real breakout happen. All right, this is the rand pound. We're going to go all the way back to a 5-year chart, and we are breaking out here, ladies and gentlemen. There's a couple different ways you can look at this. You can draw it here from the tops, in which case we are breaking out. But I think the real level here, personally, is at 1850 in the pound. I know we got through it in general for a session or two, but I think 1850 is the level. If we can hold above 1850 right now, we're trading at 1860. I think that we can see new highs in the pound versus the rand. And for me, this is very clear cut. We're looking at about $1.50 of upside here, which should take us up right at $20 would be our target on the pound rand. So just keep this one in mind, guys. There's a potential for a real breakout here. Let me just, while we're on that, I'll just go quickly into a U.S. dollar rand. I actually put this on shorted rands here yesterday when the treasury yield spiked like that. Got my face ripped off. But the bottom line is the setups here. I was trying to preempt the setup. It hadn't actually broken out. You can see it went right there and touched it. That level's at 1212. If we get up through that level, this is a really bullish chart for dollars against rand. That would take us up to new highs. I would say somewhere up maybe around 1270, 1280-ish. And I think that move can happen, and it can happen very, very quickly. So like I said, right now the setups are there for lower rand, and you got to factor that into anything that you're doing at the moment. All right, let's have a look at Sasol. Sasol came out with production report yesterday. Nothing spectacular. I think maybe came out more or less in line. Market didn't like it. We saw a turnaround on the oil price, and we really saw failure of 280. So 480. We had been consolidating above 480, and we came down and really traded down hard. There were very, very few bounces into the afternoon session. I think we traded from about 75 all the way down to closing here around 63.47 without having more than a rand bounce the entire way. It was quite consistent. So I think today could be interesting again. Watch and see if we've got any follow through here. We closed around the same levels in the States. If we get up early this morning, this might be one to look for a bit of a second day play in Sasol. All right, having a look at Amplats. Amplats also definitely failing a little bit. So we were breaking out of what looked like a bit of an inverse head and shoulder pattern. Miners were really weak yesterday. Let's just throw that out there. Obviously very, very weak. A lot of failures in the mining space. So we had what almost looked like a little bit of an inverse head and shoulder at that level. We failed pretty heavily, I think, at 340 and trading down quite hard from here. What I think is really bearish for this stock or for this sector in particular, just look at the last 2 days. You've seen reporting out of Goldfields, you've seen reporting out of Harmony, have been horrific to say the least. And those stocks had big earnings revisions to the upside. That market was expecting our numbers to be significantly better than they actually were. Now, all of a sudden, you're getting big failures out of them. They're starting to break down technically. I think these could potentially be right behind that, so that you can see the Amplats, the Impalas of this world. Impala's definitely failing at 70 as well. You could see a real reversal, and these things could come down and take out lows, and the gold shares could be on that path as well, because the earnings just are that bad. I just don't see much blue sky for them for the time being. All right. Let's look at Steinhoff. Let's actually have a look at this one as well. ShopRite. I didn't have this on the list, but this one's definitely still got a little bit of an inverse head, a head and shoulder setup, and a very clean head and shoulder setup on that as well. Just know that it's trading in that pattern. We definitely dropped below some sort of trend support yesterday, or we're kind of right at that. We closed right at that level. I think if we can get below the 200-day at the below 160s. This thing could set up nicely for a completion of this head and shoulder target, very similar to what Aspen had been doing. All right, let's look at Steinhoff real quick. Steinhoff also, pattern not looking that bullish at the moment. It needs to correct probably because it's had such a run anyway. Around 75.60, I think we talked about a couple sessions ago. We dropped it yesterday, traded well into the 74 level. Managed to close up around 75, but this thing also definitely has potential for lower levels, and I think that the market's really positioned on the same side there. The last one I'll show is MediClinic, which, I mean, talk about liquidity. I mean, this thing has been no liquidity in it whatsoever. I mean, it made a false breakout on us here at 130 and really just reversed so hard over the last couple of weeks. I mean, we've already come off about 15% off the top, maybe a shade more. And, I mean, dropping this level, I think this thing is starting to look like we can come down and test the 200-day moving average if market conditions are there for that sort of move. And that's it for today, guys. Good luck out there.